Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope you guys all had an absolutely amazing trading day yesterday, as we're about to do what we do each and every day, looking at the same 10 to 12 futures markets from an educational perspective, identifying breakouts and reversals. Let's go ahead and dive right in. S&P this morning, we are down about 5.5 points, a little bit of a sell-off from the gap fill level from Sunday evening. Now, we had looked at this as a confirmation entry primarily because of the fact that we came close to it in the past. So you may or may not have gotten in and got this little short in the Globex session overnight. I think that the chances are today that we do a little bit of chopping around. I think the markets could be in a bit of a stalling pattern ahead of the FOMC meeting, which is what we spoke about last week or so, earlier this week. And so let's see what happens today. This level up here, still, I kind of want to delete this now that we've traded into it once and we're just chopping below it. So I'm actually going to remove this level at this point. If you are so inclined, you may be able to take a breakdown short below 3,000, but I think there's a chance that we're just going to hover around 3,000 for a while. I think that 3,000 line may be one where the markets decide to just kind of hover around until we get some clear direction as to the Fed. Now, if the Fed comes out and they're a little bit more aggressive on rates than we would anticipate, then I think there's a chance what we may see is that the markets, will be really bolstered by that and move forward. Now, I think that if we are a little bit less aggressive on rates than what the market wants, we could see a sell-off. I know that's no big surprise to speak of, but I think that is the case in both. Now, what does that mean I'm looking at? Well, I think that our best level of demand is still way down here on the 4-hour time period. And as far as supply goes, I don't know that I'd really want to be selling much above current price because now I'm selling into the all-time high, right? And selling into the all-time high is never a great strategy. You do have a little area up here, which is a drop-based drop below the pivot high. That if you're so inclined, you may want to be able to give this a little bit of a go. If I look at this on a 15-minute chart, we can see that it could be right here. So it's a very small level. Oops. It's a very small level way up here. This area right in there, 3021 by 3023. Now, obviously, your stop goes above the pivot, so a little bit higher. So it's a tiny little level, but I think that if we do break out, that could work for today. I know a lot of people are going to be saying, well, what if we just take a breakout long above here and we do a breakout short below there? And I'm okay with that as well, provided that we get the right amount of basing in front of either one of those levels. I've got to get the appropriate amount of basing to make that trade make sense. Nasdaq, wash, rinse, and repeat. Essentially, it's the same thing. We are at the gap fill level, sold off a little bit from the gap fill. Like I said, if you're very aggressive this morning and you want to try a breakdown, you could try a breakdown below here. But wash, rinse, and repeat, same concept as far as where our levels happen to be in the Nasdaq as they are with the S&P. Crude oil. We came to the gap fill level. Yesterday we had talked, or a couple of days ago, we talked about the candle-to-candle move higher. That move then, it did get retraced yesterday, as I had a couple of people that were telling me that they were looking at some of these shorts. And now I think we're setting up for the next leg down, the next breakdown. And I think that if we do get a breakdown, you have clean air all the way down to this 56 region. So I think we could get a breakdown below here. We are getting some decent basing. Right now, your stop would be up above here. So determine your risk tolerance. If that's too wide for you, instead of doing the CL, which is the full contract, go down and do the QM, which is a smaller contract that you might be wanting to give a go for. So both of those levels, I think, do make sense for potential opportunities. In gold, stop me if you've heard this before, we are still between levels of demand and supply and areas where we don't necessarily see a great opportunity. So I'm gonna hold off on this. I know a couple of you have told me that you've been doing iron condors on this to kind of stay in between the levels, which seems to be a pretty prudent play. Everything else, when we look at our bonds and our currency markets, we have we've got the Aussie sitting right above its breakdown point. So keep an eye on the Aussie for that breakdown that we spoke about in yesterday's DMC. We're coming close to the breakdown at that level. You could also get a bit of a retracement back up to here, as this is a good time of the day for an Aussie retracement. The ZN, the 10-year note, we took that level off yesterday. Thank goodness we did, as we're continuing to march a bit higher. If we get a bit of a pullback, you may get a decent little pullback right into this area here. And it wouldn't be a blue line. Let me get the right color line in place. Bear with me, I'm traveling today without my mouse, so I am using the trackpad, and it's always a little bit more wonky when using the trackpad for some of these movements. And then the euro level. Now, we had a euro supply level set up yesterday on a 15-minute chart. It was a very small supply level, a little bit of a wick over wick area where I felt like we may get a decent reversal. We did not, obviously, as price just came blowing right through it. Now, we did get a bit of basing before the level. Did it minimize or eliminate the 2-to-1 reward to risk ratio? It definitely didn't help. It was right at 2-to-1 at best, but it, small stop out relative to risk in that position. As far as looking for a reversal for price to continue to come back down, I don't really have a good one at the moment, so I'll hold off on the euro, just like I'm holding off on a number of other markets at the moment. Canadian dollar, we had our trade in the Canadian, and now it looks to be putting in a bit of these lowering highs. If you're way more aggressive and you want to try a breakdown, you could theoretically try the breakdown below this little area, although oftentimes these will break out to the upside. So I like the down better than the up. Looking next at our Great British Pound and Japanese Yen, our final levels for the day. Japanese Yen, you can see that we're flattening out here towards the end of our most recent price action is very much flattening out. And whenever I see that we have that much flattening price action coming into an area, I always look for breakouts, but that's really a picture of potential breakouts when you see that much flattening price action. So keep an eye on breaking out of this particular range in the Japanese yen. As always, I tend to lean on these gap fill levels for potential reversal opportunities. And then the Great British Pound, we're still between our levels of demand and supply, which we'd identified many, many days ago. And once again, there's no reason to force the trade. We do have a little level up here that might be worth taking if we get the rally back up into it. Just not so sure that we will. So be nimble today. Make sure that your stops are in place and that you are well protected. If you guys have any questions, send us an email, support@tradersarmy.com. Until tomorrow, everybody, have a great day. I'll see you.